Hi, and welcome to the Stockscores Market Minutes for February 29th, 2016. This week, I'll answer the question of how much stock should you buy when taking a trade. Often, investors will buy the number of shares that they can afford to buy, or they'll take part of their portfolio and divide it by a certain number. So if they say, I have $100,000, I'll put $10,000 into each stock. Your position size should not be based on these things, but instead on how much you can afford to lose. You should begin by planning the point where you will take a loss if the market proves you wrong, and use the difference between that price and your entry price to calculate the risk per share. So, if you are buying at $10 and you plan to lose and take a loss at $9, then your risk per share is $1. And then you divide your risk tolerance, the amount of money that you are willing to lose on any one trade. Divide that by the risk per share to determine the number of shares to buy. So if you are willing to lose $1,000, your risk per share is $1, then obviously you buy 1,000 shares. All right, let's get into this week's market analysis. Here is the chart of the S&P for the week. The S&P managed to make a gain this week. It was hitting resistance coming into the week, and I came into the week short. Market moved down. I covered my shorts down in here simply because the market seemed oversold and then started to rally up. It has actually rallied back better than I thought. It was able to get through the highs yesterday and this morning, but then the sellers came out, and you can see that today, although we are still up for the week, we closed well below the open for the day. In fact, we closed on the lows and broke this little short upward trend line. So in a very short-term basis, my sense is this market is going to move lower early next week, but maybe only for Monday, maybe only Monday morning. But given how we sort of turned here, I think we come back a little more before we try again to move back to the highs. Now, we do have rising bottoms in the short term, but that's only in this time period. In the sort of for the month, we're basically sideways with a slight upward bias. So I would say the market is neutral right now, short term. Longer term, it's good to see this little breakthrough here that we achieved this week. I just think we probably second guessed that a little bit. But ultimately, are we going to break this cycle of falling tops? We might pull back early next week and then longer term make a run to that downward trend line that has formed, the falling top that was built in late in 2015, starting with the highs of the summer of 2015. And this is really a pessimistic pattern. And so although short term we could get a couple more weeks of strength, I'm still concerned that ultimately we're going to break through this support level longer term. Now we're looking out a few months for that to happen, so I don't think anyone needs to be too concerned about that yet, but that is the way the pattern is shaping up. Russell 2000 managed a little better gains. It didn't tail off the same as the S&P 500 did at the end of the week, but it is still below its downward trend line, basically oversold. We're sort of in the bottom half of the downward sloping channel, and that means that the upside is greater than the downside, and I think in the weeks ahead we're going to move up into here, but that's the short-term outlook. The big picture outlook is still a bearish downward sloping channel. So if you are a long-term investor and you own a bunch of these stocks, I would consider any strength over the next few weeks to be an exit door. Moving along to the Canadian market, this is the TSX 60 ETF over the last 30 days, 60-month chart. You can see we've got some nice rising bottoms that have built towards resistance. That's an optimistic ascending triangle pattern that is building. It's got basically stuck at resistance this week. A little bit of weakness in oil, a little bit of weakness in gold. It's making this pull back, but it is building some optimism in the short term. The problem really lies in the longer term because we have not yet broken the downward trend line for the TSX. This is a weekly chart, and you can see we would run down and away from the trend line and then come back, run down and away and then come back. The question now is, do the buyers have enough power to ultimately break this through? And the answer to that question is really going to come from oil. We'll look at that in just a moment. TSX Venture benefiting from a little bit of stability in the mining market and the oil market. Hardly a bullish chart, but that's why we've had 4 or 5 weeks of a little bit of upward price action. But big picture, it's still a cycle of falling tops. So glimmer of hope for this market, if you will, after really no hope for a long time, but still has a lot of work to do before the buyers come back to Canadian speculative stocks. Looking at the Treasury market, we had a little bit of a rally here with that market uncertainty. This Treasury market is now going into a flag pattern, basically taking a rest. The question will be, is it reversing? Is it making a falling top here? This week it did. And is it going to then break lower? Or are we just going to trend in this flag and then ultimately break higher? The answer to that question really comes down to what the market does. If the market corrects further, maybe the market goes up for a few weeks and then rolls over and begins to correct further, well, I think treasuries go higher and test that longer term resistance. Certainly, big picture, longer term, the optimism is there for treasuries to move up, which means interest rates down, and that probably means stocks down as well. US dollar had a little bit of a jump higher this week, still inside a trading range, kind of a pennant pattern right there. After a couple down weeks for it to have an up week, not too unreasonable. Part of the reason or part of the effect of this is that it's bad for commodity prices. So the mere fact that the US dollar is going up might be bad for oil, which ultimately is bad for the global economy, which could mean that this ends up going lower anyway. So I don't think this is a real important chart right now because it is in that sideways trending pattern. Something to keep an eye on if it breaks out or breaks down. But for now, a chart that I'm kind of ignoring. On the gold front, of course, we had the break of the downward trend there, but not really from a rising bottom. It had a good little run out of that. It is now in a flag pattern, taking a breather. And does it roll over and move lower? If it does, that probably means stocks are moving higher. If stocks correct further, if there are more problems in the oil market and defaults and all the things that come with weakness in oil, you probably see gold move up again. So it's really a hedge right now to what goes on in the oil and the stock market. Here's the chart for oil. And, again, we've had, maybe 3 weeks of sideways trading. In the big picture, it's kind of meaningless. We had, a lengthy period here of sideways trading as well. But it really comes down to, do we build a rising bottom and break to the upside? Or are we going to do like happened here, a few weeks of consolidation and then further weakness to the downside? So that's what we want to watch out for, is what does this market do in terms of breaking from this quiet trading that we're in right now? It had a slight, I would say, negative bias over the last few weeks with a descending triangle building. So that makes me think more likely to move lower, but certainly a break higher is not impossible. What you want to watch for in oil is, where does the next break come from? Is it a big break to the upside or a big break to the downside? That will telegraph where the market goes near term. And finally, fear, kind of on the downward move for the last few weeks here. But this week, interesting, it managed to close above the open. So there's a little bit of rise in the fear in the market, bouncing off of support. I actually bought some VIX through this ETF, the VXX, on Friday. Not a lot. I just took a little nibble, but I'm holding it over the weekend because it did feel like maybe we're going to see a little more weakness early next week. And so it's more of a trade for me, just a couple day hold, I anticipate. But this is, if you're a bull, the fact that the VIX was able to close above its open here on Friday, that's a little bit of a concern. Probably see a little bit of a movement up on Monday, Tuesday. The question is, will it be able to break that downward trend line? I don't know that it will. I think we're going to see a little bit of a minor pullback early in the week next week, and then the bulls are going to try to make a stab at protecting the stock market again. All right, so my ratings then, pretty much nothing changed here. Bearish long-term on both U.S. and Canadian stocks, but neutral short-term. They're trying to build some optimism, but they just haven't made that real strong break until where I can say I'm optimistic. Gold, neutral on both time frames. I actually lowered my short-term time frame from bullish to neutral this week because the gold market is kind of getting stuck right here. I need to see a break to the upside for me to go bullish again. Oil, bearish, long-term, neutral, short-term. It's trying to stabilize, but it just hasn't given us a real strong sign that the bulls are really interested in buying oil short term. The bulls are trying to push stocks higher, but they're facing that headwind from oil. If oil falls back, it's going to be tough for stocks to go up. And oil right now is at its downward trend line, and that's a place where it could break to the upside, but until it does, caution is warranted. And that means caution for stocks as well. Take a short-term approach to the market, as I've been saying for quite some time, and just take advantage of the volatility, trading the short-term swings. And if you're not an active trader, sit in cash, be ready for the opportunity that comes when there is a turn in the market. I remind you to follow me on Twitter. Go to twitter.com and look me up at Stockscores. Follow me on Twitter. I post comments throughout the week on where I think the market is going, some of the trades I'm doing, and that's all free. So again, go to Twitter, do a search for Stockscores. You can follow me there. Have a great week in the market and trade well.